Good day, all. Ira Epstein with your metal market wrap-up, and I'm going to do the weekend edition, even though it is Monday, the 20th of June. I have literally just gotten out of my bed. I'm taking it very easy. I appreciate all the write-ins. Yeah, I had a very serious case of COVID. I don't wish this on anybody. It's about as sick as I've ever been. Hit my lungs, especially hard with forms of pneumonia. They addressed that right away. So I had been on antibiotics now for 7 days for the lungs. I can talk again. I can't talk long periods of time. My voice starts cracking, but I am certainly healthier and I am well over the hump. I'm on the road to recovery now, and I appreciate you all sticking with me and understanding how rough this is. Please don't get it. There's nothing you can do. You can get it by touching something. You don't know where you're going to get it from. My wife and I are very careful. We both got it within a week of each other. So she got it before me. She may have given it to me. I don't know. Okay. So as we look at the markets, you know, today's the Juneteenth holiday. So we have limited, quiet type trading. Things will start picking up tomorrow. We start getting our first real information of the week as well. Now, when we look at the gold market on a monthly chart, I have been telling you how you're caught in this narrow band. It hasn't changed. You're just sort of wanting to sit here at the 1691 to the 1946 level, just back and forth in there, not doing a heck of a lot one way or the other, just caught in the upper and lower band. When we look at momentum off the weekly chart, the momentum is down. I use the red line, the 18-week, to decide what is the bias of the market. Moving averages can give you filters. Traders look at them as a neutral spot on a chart. When the market's crisscross in certain ways, up or down, they say they're bullish or bearish, but there's a simpler way with it. When you're under a key average, you have a bearish bias. When you're over it, you have a bullish bias. It filters the rest of your studies. Look at it that way. When I look at this chart, it's exceptionally difficult. You have a market that I can argue you've got lower highs, but you had an outside week here, right there. See where I'm pointing? That was 2 weeks ago. And you actually took that week's high out. Then you came back and you took out the week that got through the high to the downside. That just screws the chart totally up. I think you're in the middle of no man's land in the gold market. You're fighting a battle between the green, the 100-week average, and the 18-week average of closes. If everything were to let go, a possibility is the 200-week. I don't think that's really in play. More likely what's been in play is the lower Bollinger Band of 1,800.5. But as I said, even though I've got the swing line down, I don't trust them, because of that pattern starting 2 weeks ago with an outside week to the upside, and then just this past week taking that out. Now I wouldn't touch that market. We then get to the slow stochastics. They had been coming down and they're now flattening out. So a market that seems to be caught between attempted support level of the 100-week, the lower Bollinger Band. If you can clear the 1875 level, 75, that's the high that you got into here, I think it was 75.80, then maybe you can get up and challenge, make an argument for the 18-week average. It's far away. It's nowhere immediately in front of you. That's 1,900, it's $60. I think this is a week where you churn. You really don't go anywhere. The gold-silver ratio is still not giving an edge to the base metals, which is bothersome. In Beijing, I read that they had 3 more cases of COVID. 3 is not bad, and the people that got it in Beijing were already in quarantine. So you would look for things to get bought by China, the factories to reopen. I'm not reading too much about that just yet, though. On the weekly chart of silver, certainly not bullish. That's a bear-looking chart. To negate the downtrend, you've got to take out 2250, 2.5. Right now, the pros, I think, will sell the market between here and that number with stops over that, looking to see if they can press the market even lower. I want to go back for just one part on that chart. It's important. Do you see right here, 2043.5? That's your 200-week average. If you break, I have doubts that you'll go to the lower band. I think the major support's at that number. I'm not saying you have to get there either. I am saying the bias is down, the trend is down, and to break all this, you got to get through 22.53, let's say. In the copper market, to me, this is where professional money should be covering shorts, and yet they're not. This is the current quote. You're looking at the market still down 20, 401 and a half. I would have thought the market would have liked to have been more aggressive with short covering against 405 and a half, the 100-week average in green, and the lower Bollinger Band to 395 and a quarter. So far, I'm not getting that. In the platinum market, the market has kept a pattern of higher lows and higher highs. However, now for 3 weeks, it stayed underneath the 18-week average, giving the market downside bias. And the battle seems to be, and it's been this way since back here at the end of April, the 200-week average up to the 18-week. If the market gives ground, you have not hit a lower Bollinger Band in a long time. 873 and 3/4. The last time you did it was here, and that was back in the month of April. I have my doubts that you're going that low. So I'm waiting to see it come alive, and you would think if China's saying, hey, they're not locking down again, you'd be getting base metal bids. You're not. What is going on is a big question. Last, the dollar index still looks bullish to me. I don't see any real change here. You have a market that's in a major uptrend. At some point, you would think that the foreign currency market's going to work against this because everybody, now let me define this, everybody is raising interest rates. European Central Bank today, Ms. Lagarde had a press conference this morning, a meeting, and she's talking. Yes, they're going with their quarter-point hike in July, and they are open after that for the next meeting. Don't know if it'll be more or not. They want to see the impact of the 25 basis point. She's completely shifted gears. She'll defend her ideas, but she's under a lot of pressure to do this. And what's doing it? Inflation. The good news about inflation is energy's not running to the upside right now. And if energy doesn't run to the upside, that helps Europe back off a bit because they import so much inflation via that problem for them, and it is a big problem. Now, you know, one of the things that a lot of people ask me about are these pivot points. I get questions all the time wherever I go, people saying, Ira, tell me about these pivot points. Well, to make a long story short, I didn't devise this. I know who I thought was the best trader ever with it, and I can't use his name. He's barred by the NFA and CFTC, so I'm barred from saying it. But he used to run money, and I'm going back in the 80s. Managed money through my accounts. He wrote a book, How I Made $1 Million, or how people have done it, and he did. I recall that in the 80s he was making fortunes for people. And then the system, what was wrong is the futures were so much smaller. Remember, these were the open outcry. There was no such thing as a computer when he was doing all this. He became the market, and he got in his own way. Had he stayed about a quarter of the size, probably still a working system. At least that's what I would have thought, because I watch this all the time. Let me tell you what I do with it. I'm really not a day trader, but I have clients that are, and they've taken my course on this, and it's free on our website. I teach you how to work with that, so stay tuned, because that's going to be given to you here. But I do use it. Let's assume I'm trying to get short for a swing trade or long. I look at these numbers intraday. Should I be adjusting my number? What does it say? So that is exactly how I go about using this, and it fits in for me well. Now, well's your own relative term, but often I see something, I go, I shouldn't do that, Ira. One part of my work's telling me, hey, move your number to get in, and the other's saying, no, where the stochastics are saying don't do it, because I tie momentum to what I was taught by this trader. How do you get this for free? And it is for free. It's the full course. Go to our website under free offers. You can also just take your cursor, move it up here. You'll see an icon appear when you do that. It'll take you, click it, it'll take you right into the free offer part. I'm Ira Epstein. I want to thank everybody for the many, many nice emails that I got. I'm feeling better, as you can see. I'm not fine, but I'm way on my road to recovery. You have a great evening. I'll see you tomorrow.